Okay, so I'm gonna show you one of the most important tools. I can guarantee you any trader would say that is a trade log. What is basically a trade log? A trade log is something that you put into the inputs of your trades. Say you took a trade on July the 21st, like this, from 9:53 and 9:56, right? For me, I have the day, I have the duration, if it was long or short, if it was a sweep and break or a change of character. I know many people don't trade that, they don't trade SMC. I don't care. This is my entry model. If this had any higher time frame alignment, how I was feeling inside of the trade, stop loss size, actual RR before break even, top RR, higher time frame RR, optimal versus the actual, fits trading plan or not. It was a win or a loss or a break even in that case, right? And the trade type, right? And also structure. If we had pretty much normal structure, all time highs, if you can even input a little bit more, something like a range or some stuff like that. And by the end of it, you got the entry and you got the comments, right? Why this is important? Many people don't log their trades. They take 3, 4, 5 trades a day and they don't even log this. Why they don't log it is because it's not fun, right? But things that are boring lead to the things you want. So eventually, if you log more trades, you sooner or later realize the mistakes you're making, pretty much. For example, here, better targeting, you got higher time frame alignment, right? Why did I target this? It was an actual RR of 101, but why did I do that? If it was a 103, that was optimal, right? You go into this and you realize that maybe it was because you were pretty much premature, right? Or you were searching for reactions where it didn't really fit your plan, but at the time you were kind of not conscious on doing that. That's why you lock the trades, right? And that's specifically how you use a trade log to review your trades, review your performance, and be detailed about it. If you're not detailed about it and 100% clean about your trades, it's not gonna work. So I pretty much made this for the past week, right? All the pretty much the trades I will take the last week, and I put in here. So yeah, that was basically the whole thing, right? So let's just start. It's a little bit more complicated as I go forward, but you can start with this simple stuff. If people like this, I might add the more complicated stuff, right? More complicated, it just takes a little bit more time and effort, but eventually it's rewarding, right? So you got the trade, right? You first create a table. I'm gonna be sharing this table right below, or you can just copy it. You get the trade first, you get the title, right? You can put whatever title, and you get the date, right? For the date, I do this in Notion, pretty simple. Many people log in on TradeZella, log it into various platforms. I don't like it. I just log it into Notion, so it's really easy for me to actually see it. And yeah, I pretty much put the end of the day. I trade is a scalping, right? So I'll be in and out of the markets in a very short amount of time. So I put end of the date and include time, right? And with a 12-hour format. So then you will put that, and you will put this formula. That edit formula is gonna be pretty much the days, right? So it just subtracts what day is it from this, and you put it in here, right? Then the duration of the trade, right? How long it lasted. 3 minutes, 2 minutes, 2 minutes, 2 minutes, 9 minutes, 16 minutes. It really depends, but you can have an average, right? You can even put stats on, okay, if this is further than 30 minutes, say, it's likely to be a losing trade. So I might get out before that. Or if it's, say, my winners are usually between 0 to 10 minutes, right? So at the 10 minutes, if I trade 2 contracts, I might take partials on one or close one and keep on going. You can have various approaches into the risk management strategies, right? Then you have the long and short. This is the unique property that is pretty much select, right? Then I might suggest this because this is not entirely for you, for your plan, but I might suggest to have the variables that you use to actually create a trade log, right? If you're searching for inverse fair value gaps, how big was the inverse fair value gap, right? The for FAG that got invalidated. How many points after that? How many points got invalidated after it inverse, right? So when you take the entry, if you take IFVGs, how many points were the SMT, right? For example, you have to put the variables in here that you might want to actually um trade. For example, this is an entry model, right? What type of sweep? This is a pretty much an entry model. So I just have to sweep and break and a change of character. So in here you might add entry model, IFBG, or change in state of delivery, or any whatever it might be, right? Retest, break and retest, whatever it might be, you can put it in here. Higher time frame alignment, I can absolutely guarantee you that if people would use more of this, they would extract more from their strategy, right? When you align every single time frame, and I can guarantee you many people as well will agree with this. But if you actually just align the time frames, as simple as that. If you're trading on the 1 minute, but you align the 15 minute and you align the 4 hour, what do you think is gonna happen? There's gonna be more data on those highs and lows from the 4 hour. The reason why high time frame works is because there's more data on those candles, right? So if you're trading with more data on those candles, what do you think is gonna happen? Well, it's gonna be higher probability. So when you trade a position, might be a sweep on a higher time frame that you might consider. That might be an FVG on the higher time you might consider. Whatever it might be, you can use that to target higher or lower, because why? You're trading the fractal nature of the markets, right? And yeah, it might seem different on the 4 hour than the 1 minute, but at the end of the day, it's fractal. So if you actually use that to your advantage and you target when in reality you should have target on the 4 hour, but you enter on the lower time frames, what do you think is going to happen? And if there's no higher time frame alignment, you just target the simplest, easiest high or low you can see. I can as well tell you that that's going to increase your win rate by a lot. Not because it's higher RR means it's better, right? Low RR, high win rate is better for psychology. Higher RR, lower win rate will give you sometimes way more RR for the month, right? You gotta choose. I choose lower R, high win rate, pretty much. So yeah, you got higher time frame. How are you feeling? You're feeling good. You're feeling more or less. You're feeling bad. Whatever it might be, you gotta log it, right? Straight up, easy and simple. Then something I will tell you is stop loss size. You gotta log that. Why? So you can look back and understand. Okay, in 2025, on July 2025, I logged the trades, but there were 34 points, and now I have my stops pretty much at 40, 47. What does that mean? Volatility increased. What does that mean? More people are getting into this markets, meaning price action is changing not on itself, but on the volatility. That's what people tell you to adapt into the markets. It's just adapt into whatever volatility might be. The market is going to move pretty much similar, not all the time, but majority of the times. The only thing that's going to change is volatility. That's how you adapt onto the stop loss size. Not because a certain stop you're going to take here or not, because that's not adapting to market conditions, right? You're just going to put your stop based on price action. That's how it really works. Being really mechanical in that way is not really adapting to price action. If you actually trade, on tariffs, for example, a 50-point stop loss would be nothing. Those tariffs trades were 187 points, 200 points stop losses, but you were adapting to price action. So you are adapting to volatility. That's why I tell you track it. Then actual RR is the RR. I don't base myself on points. I don't base myself on any of the other things. I don't think that's really the way to go about it. I base myself on RR, meaning a 1 to 2, 1 to 3, 1 to 4. How much I'm risking versus how much I'm getting. So the actual RR is the RR you actually got, not the RR you were targeting, but the actually RR that you got, right? RR before break even. That would be triple B, I just realized. What does that mean is how much it ran before it came back to the entry. Why do you track that? If you have any possibility that on the losses, when it runs to a certain amount and you haven't seen that, if it runs to say 1 to 1.5 majority of the times and then you stop, it stops you out, and majority of the times the winners, majority of the times, if 1 or 2 times doesn't happen, doesn't matter. If majority of the time you're cutting your losses by being break even, you're getting better on that. So that's why you target. And top RR is just the max point between your entry and your exit, right? That's the max RR between your exit, entry and exit. Is literally like capturing the tops and bottoms. What does that work? Because you can actually adapt your strategy into, okay, I think I'm taking profits too early on this, or I think I'm not taking partials on this because this is running. You can take various approaches on this, various data from this. So if it runs, 1 to 5, and you're getting break even a little bit before that, what does that tell you? Okay, that it actually runs and I can actually put my break even. Why? Because it just keeps on going on the break even, meaning if this pulls back, that just completely invalidates the move, right? Because majority of the times it runs. This is an example, right? And then high time frame RR. I put this as if you want to target specifically on one column, normal targeting to highs and lows, the nearest for me is pretty much anywhere from 1.3, 1.5 to 2.5. That's the usual, the average pretty much that I target. After that, it just has to be really clean to target 1 to 3, 1 to 4s. But if I go to the higher time frame RR, if it has higher time frame alignment, you can see only when it has that, I actually target a little bit more. But if it doesn't have that, I just put straight up the actual RR, right, in here. So I can count the difference between targeting normally, that would be this, and targeting with higher time frame. You can see here was the difference of 1.1. So, but in a bigger amount of data, it actually gets better on that. Then optimal RR. I like having 2 trade logs. I'm explaining that in another video, but you can really compare yourself to the absolutely perfect entry and exit versus the entry and exit you've had, right? So this is pulled out from the absolute best entry and exit based on your plan, and you can compare yourself while you're staying short, while you're getting a little bit more. You broke your plan. What is happening? So you can compare the optimal RR versus the actual RR, and the closer you are to the optimal RR, the better you are, pretty much straight up, because you're not searching for perfection, but you're searching for a way better entry and exit. Please tell me this. I don't wanna. Okay, this is recording. Many times, it just gets fucked up. So you got optimal, then you got fits TP, right? Fits trading plan, pretty much. Not take perfect trading plan. If it fits or not. This is very important. Okay, you're only gonna log your wins. Why? Because in here you can actually see your win rate straight up. You can see percent, not empty. That's gonna be the losses, and it's gonna count only the wins, right, from the whole data. So you get straight up 61% win rate on this set of data, right? Really good. With an average win of about 1 or 2, so it's really good. Then you got trade type. If it was a continuation or realignment, if you're taking continuations or reversals, pretty much realignment, I call like that, but it's straight up that. And then this is also very important to see how it just performs when you have pretty much close to none very good price action that's all-time highs. They just completely overexpanded versus normal RR, normal structure, sorry. You got normal liquidity point, well, for me, or normal structure you can see clearly. When it's majority of the times when it's all-time highs, just wants to bounce a lot, especially in US30, the pair that I'm trading. But for example, other pairs I don't know, other pairs or other assets that may perform better with their all-time highs. It just really depends. That's why you want to really, really, really track it. And by doing this, you're going to learn so much about your strategy, so much how you react on certain market conditions. That's just going to get better and better and better, and you're going to actually be the trader you want to be, right? And then pretty much your entry, you know, straight up entry. For example, here it was me, very, very clear for me. Swept all this, just broken here, break the structure. Really, really simple. And comments, right? What you did in here, you gotta be really, really true to yourself. You don't have to lie to yourself. At the end of the day, if you lie to yourself, the reality of this, I did that, I've done that. In the first years that I was pretty much getting started, I got no progress. Why? Because you were lying to yourself. You're not actually getting better because your ego's in the way. You don't want your ego hurt, so you just lie to yourself on saying like, well, it actually failed because of this and this and that and whatever, right? So you keep on doing that, and that just expands to a bigger, lie, and you can't trade. Why? Because you haven't logged those trades and actually have extracted the truth about it. That is, you can't fucking trade, and eventually you get better. Sorry for the word, but that's the reality of it. You can't trade, and eventually you become better by doing the things you don't like doing, right? Just reviewing, just doing all this crazy stuff over and over and over and over again. And it just gets so much better after each trade, after each week being reviewed on, okay, for example, let's say 1 week you got it. You absolutely got it. And the next week, but you got to realize, for example, last week was really a winning week, right? But next week, right, might be cooked, right? So I'm not going to react into happiness of, it was a very good week, no losses, because I can truly know the next week can be the balance of the wins, and I can be pretty much close to break even, right? So I just got to be really calm, and you logged all those things, right? So this is the simplest trade log you can possibly have, really straightforward. I can go on and on about how I log my trades, how I log my back tests, but this is the very thing you can start, and you're just gonna get instant results after you're actually committing to this process. So that was pretty much it. Hopefully you've liked it. It's not fun, no, but once you get a really good amount of data, like for example this, it's just fun to review. This was a win, 35 points, blah blah blah. Average win and loss, it was around 60% win rate. Very good, right? And yeah, until that, you just gotta log it, and you gotta actually understand what you're doing, pretty much. So that was pretty much it, and you can see a little bit of this, right? Pretty straightforward, not too crazy. Yeah, that was pretty much it. Then